Just got to be careful there. That's all I got to say. Like,
You have a trust.
be transparent.
You are truthful, and when you do the right thing,
Yeah.
this goes a long way.
Really good brokers, the ones that are successful.
How does a person identify?
I'm like, I want to come back with a different, hopefully the rates come down for fixed. You lock into a fix then, no penalty.
Audience variable.
Use the money, it's gone. You use the money, it's gone. Never back.
Because when we bought our first house, we never knew about this closing amount.
From your checking to your savings.
I have to look at in my mortgage broker.
So that's always good. And then professionalism, like,
Trust
yeah,
between your mortgage broker and your client.
portion of your last year's income, it goes up with the price of the house, obviously. At the dealership, like, they don't even show you like the model, but they want to get this one off the lot quick.
You help the client and then you're really proud of yourself.
My sales were always driven by service.
People who are just getting into banking,
Yeah.
getting into
No.
Warren Buffett once said, "Someone today is sitting under a shade because somebody else planted a tree long time ago." Now, thinking of these timeless words, financial security is also like the shade of a tree. It's not built in a moment. It's not built in a day. It's built when an individual and a family takes the right financial decisions iteratively at the right time under the guidance of an expert person who has a huge amount of knowledge about all the financial products and has a lot of integrity and honesty to guide them, mentor them, and tell them as to how to make sure that their financial futures are completely secure. Today we have this kind of a person with us today, Mr. Gary Nagra. Gary is a mortgage broker and a financial specialist, and he deals with a number of financial products and has helped countless individuals and countless families make their financial futures completely safe, completely secure. Hello, everyone. Welcome to another episode of Impact Makers, a podcast which is brought to you by FC Media House. FC Media House is a digital platform which is geared towards bringing to its audience stories of people who are leading magnificent lives, but are also making sure that they're helping their communities and their society. Hello, my name is Navneet Popley and I'm the founder of the FC Media House. Joining me backstage is Harjas Popley, who's the founder of the FC Group. This particular podcast is sponsored by FC Times newspaper, which is Victoria's first multilingual newspaper which brings communities together. It's also sponsored by Gary Nagra, the mortgage broker, and he's building financial futures one mortgage at a time. And before we start talking to Gary, we'll do the territorial acknowledgement. We acknowledge with respect the Lekwungen peoples on whose traditional territories our organization stands, and the Vasanic, Esquimalt, and Songhees people whose traditional ties to these unceded lands remain to this day. Thank you. Gary, so honored and so pleased to have you amongst us today.
Thank you for having me.
All right. So Gary, you've helped so many people till now. You have been in this business for so long.
Mm-hmm.
There's so many people who know you and respect you.
Mm-hmm.
But tell me about yourself, about your personal journey as to where you were born, about your family, and what decisions did you take, all through this life, all through this journey till now, to bring you where you are today?
I was originally actually born in Vancouver. My parents came to Canada from district of Hoshiarpur in Punjab, India. 1982, my mom came in Vancouver. So I was born in 88, and my dad came a few years later after my mom, also from Hoshiarpur, same district in Punjab. And I was basically, even though I was born in Vancouver, I technically never even lived there. I was pretty much my whole life. I grew up in Victoria.
Oh, nice.
Yeah. So I was like maybe 5 months old and I came right to Victoria. So yeah.
So since that time you've been in Victoria all through.
Life.
Oh, nice.
Yeah. So yeah.
Okay. And tell us about your family.
So family, I have one sister. She's about a year younger than me. She's in Toronto. She also grew up in Victoria like me, and we both went to the same high school together. And We're
Mm-hmm.
very close siblings. Growing up, we fought a lot, obviously, but we also were each other's best friends. And I was very protective of her whole life. So I was always kind of like just kind of always protective of her. And yeah, so she basically, she is in Toronto now, and I chose to stay in Victoria.
Mm-hmm.
I personally love Victoria. I don't see myself going anywhere else at this point. I think it's a great place for families to be
Yeah,
to
right.
brought. So yeah, but high school, elementary was Victoria
Mm-hmm.
Lambert Park High School.
Mm-hmm.
So I still live in that same area of Lambert Park. So yeah, I went to my parents, my dad, his whole life he drove taxis in Victoria, taxi
Mm-hmm.
driver with Yellow Cab.
Mm-hmm.
Before it was Empress Taxi.
Okay.
And then yeah, so the other one is I went to UVic, and then
Uh-huh.
UVic I graduated in 2014 with economics degree, a
Yeah.
bachelor's. Shortly after that, I decided to do government, maybe try to my luck in government jobs.
Okay.
Didn't enjoy it too much, so then
Uh-huh.
I did banking right away.
Uh-huh.
So I started my banking career in RBC in 2016 as a teller.
Uh-huh. And you were there for about
2015.
8 years, right?
8 years, yeah.
Uh-huh.
So 2015 I was a teller for 1 year at RBC. And then 2016 I left for CIBC
Okay.
because they had an advisor role, which I was looking to become a financial advisor. So
Okay.
I took my mutual funds license and I became a financial advisor at
Uh-huh.
CIBC. Yeah. And I was with CIBC for 3 years, 2016 to 2019.
Okay.
And then I went to Scotiabank from 2019 to 2023.
Okay.
So 4.5 years Scotiabank,
Mm-hmm.
3.5 CIBC. So with the RBC, almost 8 years banking.
Nice. And
Yeah.
and growing up, you were always interested in finance, or what made you think about, joining economics?
So yeah, so I'll be honest, I did try at first, like I tried my hand at like medical school, trying to do the sciences.
Ah,
Wasn't for me. I wasn't too good at that. I didn't enjoy it. So I wanted to try something different. So I took some time off. I went to India for a bit.
you did?
I did,
Oh,
yeah. I went to
okay.
India and spend time with the family,
Uh-huh.
refresh the mind. Because I was like, sciences isn't really for me. So then I decided, I'm like, I want to come back with a different degree because I want to
Mhm.
graduate with a bachelor's. So then I just decided, I'm like, economics is so. I was like, it's so practical. Like it's how
Mhm.
money goes around in the
Yeah.
world. Like it's how money circulates and how economies function. So I was like, it's really practical. And I was like, I'd probably get like a job to
Okay.
that. So then I went back after I came from India and I did my degree in economics. Yeah.
Oh,
So
okay. Okay.
yeah.
And so growing up, you joined finance and you did economics and you were in banks and I'm sure you had a number of friends because you're always here in Victoria. So
Oh yeah.
so when you started working,
Yeah.
as a mortgage specialist,
Yeah.
um, and when especially immigrants when they come to
Yeah.
Victoria, they don't know much about how the financial system
Correct.
works here.
That's true.
So there's so many myths about the financial system, about mortgage. So how does a person start? I mean, even people who've been born and brought up here
Yeah.
don't know much about the
No.
finance system here.
That's true.
So for people who are viewing your podcast right now,
Yeah.
where do they start? And sometimes people are really scared about this.
Yeah. So like when I actually started with Scotiabank in 2019, it was in the Belmont branch in Langford.
Okay.
So we had this program called a Start Right. So that's exactly what that was. So when the first wave of like Indian students, and actually not just Indian, African, we had all over, a lot of international students.
Okay.
They came to Scotiabank to open up their accounts. So when you first come, I always recommend you have to get a credit card.
Mm-hmm.
Checking savings, obviously get your savings. A TFSA is essential.
Mm-hmm.
Technically, there's not as many rules to have a TFSA as opposed to like RSP.
Okay.
RSP, you have to have income for 1 year declared.
Mhm.
Whereas a tax-free, you just have to be, at that time, it's been a while since I've done banking, I've been doing mortgages, but I remember the TFSA, you just had to be a resident of Canada. And as long as you're a resident of Canada with a SIN number,
Mhm.
you could open a TFSA.
That's nice.
So that's what I was, so what was an RSP? It's like you have to have taxable. So I always said TFSA, get the TFSA, and then a checking account, a savings account, a credit card's a must.
Mhm.
And know the basics of a credit card to not overutilize it. If your limit's 1,000, carry a balance of 500 or less.
Oh,
So
okay.
don't ever overutilize the credit card.
Mhm.
That's a given because Yeah, so that's one thing with credit cards. So some people will think it's not the right thing. Maybe cash is king, but not really, because you have to have a credit history. So if you don't have a credit history, there's other things I can get into if you want me to get into it now. But
Good.
okay, so one thing I always tell people to be careful of when you're co-signing for a friend on a loan. I've had clients and they don't know the implications. They
Oh,
co-sign for a friend on a car loan,
okay.
and just to be honest, like you have to know the implications of that, because with my friend, and it's just like that, I know like he did that as well. So anybody else that does something, you have to just be careful that when your friend doesn't pay for it,
Uh-huh.
if they leave the country, or even if they just decide I don't want to pay for this,
Uh-huh.
then you're on the hook and your credit score goes down.
Oh.
They missed their payment. So just co-signing, I know we all want to be nice friends, and
Uh-huh.
just be careful. Like if you want to be helpful, maybe give them cash deposit towards the car,
Okay.
like towards a down payment. Just like, here's 5,000, you can pay me back in a year.
Mhm.
But that's easier, honestly,
Okay.
in a lot of ways, because when you co-sign, your credit score is going to be depending on that person. So just be careful.
That's actually a very good advice because not many people know about this,
Mhm.
especially people who come from India or from other places and they're very new to Canada.
Yeah.
They think, okay, yeah, this is a good thing to do. You're being helpful and
Yeah.
co-signing is okay. So,
No.
what other things should people be, more careful about when financing is?
Car loans, like mortgage brokers, we always say. So that's the part I missed. After banking, I've been a mortgage broker now for a year and a half. So after banking, I just took this path of mortgages. But as a mortgage broker, we all tell our clients that one thing you have to be careful of. The number one killer of mortgages is car loans.
Oh, really?
So yeah, so like you pull a person's credit and their car loan, because their payments are high,
Okay.
they're amortized over 7 or 8 years,
Yes.
6 years,
Yes.
whereas a mortgage is 25 to 30. So now with a car loan, what happens is we pull their credit and there's a $900, $1,000 a month payment.
Oh, yes.
That's their TDSR, you heard the debt to service calculation. Just be very careful. That's all I got to say is like whenever you do the car loan, that has a high payment. So those are things so another thing is like, make your monthly payment on a credit card. I always recommend making your credit card payment twice a month,
Okay.
because if you make it once, you might time it incorrectly and miss the due date, and then you're technically late. So just make it twice. Like for example, just divide the payment by half. So if your
Okay.
payment's 500, go 250, 250.
250, okay.
But don't
Miss the deadline.
that's all I can say. Yeah,
That's
like
good.
you got to be careful, because if you do it twice, you're good. So, and keep your credit card utilization low. Like I said, keep it half the limit. So if your limit's 1,000, your balance is 500, that's ideal. You can use up to the limit, but just pay it down to half the limit.
And this concept of a credit score, that you need to have a credit score to, buy
Yes.
a house or buy a car.
And that's the whole point of this, is like if you don't co-sign, things like that, you avoid these mistakes. You have a credit card. We always say have 2 credit cards, always, because sometimes one bank will only give you $1,000 limit. But the problem with that is the $1,000 limit's not going to get you anywhere in today's world. So we say get a second one, and that way you can not max one out, but even it out. So credit card, and then if you want, sometimes the chip's not working, so you have a backup credit card. But in my opinion, it's just like all I can say is, don't be careful when co-signing. I'm not going to say don't co-sign. That's your responsibility, but just be careful.
Okay.
The other thing is, credit cards. Don't max it out. Don't miss your payments. Keep your regular payments. If you don't pay it on time, for example, like any kind of cell phone bill or something, you don't pay it on time, then what happens is it goes to collections, right?
Oh,
And you want to avoid that. So when it goes to collections and then you don't pay collections, then what happens is it goes into a consumer proposal or bankruptcy situation. Avoid those.
Okay.
If you ever file bankruptcy, you cannot get a mortgage typically for anywhere from 2 to 7 years.
2 to 7 years.
Yeah.
Oh my God.
Yeah.
These are pretty good financial habits that you're talking about.
Yeah.
So it's important because sometimes people who would come from India, the first thing that they would do is buy an expensive car.
A car. So we always say get the mortgage first, and that's not just me trying to sell a mortgage, because cars are easier to get. Like I'm not trying to talk down on dealerships. I'm just saying, you go to a car dealership, we all know how they work. They don't check much.
Yeah.
Bad credit, no credit, we don't care. No down, we don't care. We'll get you the car you want. They'll get mortgages don't work that way.
Right. No,
Yeah.
we know the kind of work that
Yeah.
we have to do to get the mortgage, and
So
sometimes a number of mortgage do not even get passed.
Yes.
I mean, there are people I know who were not able to buy a house
Yeah.
because your mortgage was rejected.
It rejected. There could be lots of issues. Like credit could be one. So like we always want a credit score of at least 680. We typically say.
Okay.
As a mortgage broker, like what we do is we work with banks, credit unions. We work with B lenders. So what we do is if we can't get you approved through a bank or a credit union, then what we can do is we can get you approved through a B lender. So with a B lender, what happens is if you have 20% down, we can work with bad income. We can work with low credit. B lenders are more flexible.
Okay.
But if you want to get a better interest rate, you want to go with the A lender. That's like the Scotiabank, the TDs.
Right.
And those guys, so you want to have the issues you don't get. So credit is one. Down payment is a big one. So you need 5% down on the first 500,000 and then 10% for the amount above. So on an average, you would need for like a $500,000 house, you would, or if anywhere from 500 to 600,000, you need about 25,000 down to up to 35,000. That's me just rough math. Like that's including closing costs too. So like with your down payment, you want to have an extra 1.5% of the purchase price just for closing costs.
Right.
So 25,000 is like the absolute minimum, but you want to have up to 35, 40. Like it all goes up with the price of the house, obviously, but so that can be an issue for people because people don't save.
Yeah, I know, because when we bought our first house, we never knew about this closing amount.
Yeah.
And it's very nice that you're talking about this. And for people who are listening to you, they would know that, okay, when you're trying to buy a house, these are the things that they have to take care of.
Exactly.
Yeah.
Exactly.
So tell me something, Gary. I have heard people say it's difficult to buy a house and they're a little scared how much money would be required. So what are the things that people should do right to make sure that they're able to buy a house? So
one thing that they just came out with, when I was a banker, we didn't have this. We had a TFSA and RSP. That's it. There's a new thing called a first-time home buyer savings account, FHSA. You got to get that because you put $8,000 for the 1 year.
Okay.
You can put a retroactive 1 year for $8,000, so $16,000 total. Your partner gets his or hers, and then it's tax-free and tax deductible.
Okay.
So it combines a TFSA. So when you take it out, it's tax-free. And when you put it in, you get the deduction on your taxes.
That's nice.
Also have your TFSA, because a TFSA, you're going to basically, you could put up to, I can't remember the limit. It depends on your, which year you're going into, but you can put anywhere from like 6,000 up per year in a TFSA. And the exact numbers I don't remember because it's been a while from the banking days. But a TFSA and RSP used to be a portion of your last year's income.
Okay.
So whatever taxable income you have last year, a portion of that you can put towards RSP. So TFSA, RSP, and FHSA, those are absolute musts that you have to have.
You have to have that.
Those three things you have to. And you can have like a regular savings account. That works too. It's not going to get you much interest. But, with a TFSA, you could put into a mutual fund to get interest. So stocks if you want, or GICs. But I wouldn't recommend GICs. But TFSA, RSP, FHSAs, you can have regulars. Those are, so what the smart thing is, like if you're getting paid every 2 weeks with your paycheck, just regularly put the money from the paycheck, like $200, $300, whatever you can afford, $50, $25, $25 is fine. Put it from your checking to your savings.
Okay.
Whether it's your FHSA, your TFSA, whatever. So so that's what I would say. So basically just put the money from your checking to your savings every payday. You don't see it just goes there. Otherwise, you might forget to save, right?
That's awesome. So audience, if you're listening to this, these are wonderful pieces of advices. So if you adopt these financial habits, it'll make your credit score really well. And, people who complain about affordability and not being able to buy this or that, this is how you can probably plan your financial future in a better way. So Gary, people are a little confused about refinancing.
Yeah.
They're like,
refinancing,
we got our loan at about 2% interest. Now we have to refinance and it's like 4%.
Yes. So but what happens with the rates change year to year. So when you're refinancing, what you're doing is you're taking the equity out of your house. So what they want is you have to have 80% loan to value, meaning that you have to have, like we do an appraisal on your house.
Okay.
So we take 80% of that amount of the purchase price or the appraisal amount, whichever is higher or more recent. And we take 80% of that, and that's the maximum we can do.
Okay.
So if your houses are valued at $1 million, let's say it's $1 million appraisal, your mortgage is $500,000. And if we appraise it at $1 million, we can lend up to $800,000. So now you
Okay.
do the difference. 800 minus 500 mortgage,
Mhm.
you get a $300,000 line of credit or extra mortgage
Okay.
on top of your original mortgage,
Mhm.
assuming your income qualifies. Because if your income does not qualify, then the appraisal and 80% loan to value means nothing. You have to
Okay.
qualify. Yeah. But you could get up to 80%. And that is pretty much like, how do you say it? It's like, that's what we call a refinance.
Okay.
That's what it is. Yeah. And a
Okay.
refinance, like, so if you get a house 3 years ago, and today you're doing a refinance, the rates could be higher. So that's what your
Yeah.
question. So if the rate that you get, it depends on the bank. Some banks do what they call blend and extends, or they blend the rates.
Okay.
So you get a combination of your old rate and the new rate.
Oh.
Some just give you a new rate. It all depends on the bank.
Okay.
Or you get a line of credit, which is just like interest only payments usually. And that fluctuates with prime rate.
Okay.
But a line of credit's more flexible because with a line of credit, you can use it, pay it, and then you can use it again.
Okay.
Whereas a
Understood.
mortgage, what we do essentially, when we give you the funds, we put it into your checking account.
Mhm.
We give you, let's say you get 300,000 equity. We put it into your checking. You use the money, it's gone, never
Oh.
back. Whereas a line of credit, it's there.
Okay.
Of course, it's not free money, it's interest, but it's always there once you pay it off.
Oh.
So a line of credit is more flexible.
Okay.
Mortgage is like a loan. It's just kind of in and out when you use it. But yeah.
And Gary, tell me something. So for new people, for example,
Yeah.
who just entered the country,
Yeah.
they don't know much about
Yeah.
who are the right mortgage brokers, for example.
Right.
So how does a person identifies that, okay, these are the qualities that I have to look at in my mortgage broker?
Okay.
Who's a right person? How do you identify?
I'll tell
Okay,
you,
yeah.
like from the insider stuff that we get the most complaints is that when the mortgage broker doesn't get back to the client on the phone. So
Okay.
like a client calls, sometimes mortgage brokers know the client's not approved. Maybe they've dealt with them before and they stop responding. That is horrible. So my number one thing is always be responsive. Like if they're texting you, calling you, even if they're declined, just tell them they're declined so they're not going to bother you. Like it's not that they're bothering you, but if they seem to like just be courteous. So just pick up that phone, answer that text. Like don't be just be courteous to them. That's like just be like a response is really good. Yeah.
Yeah.
That's one thing I can tell you that we get a lot of brokers get in trouble sometimes, like just like that, or their clients, they don't get back to me. So
Okay.
they're busy somehow. We're all busy. Life is busy, but just got to be careful there. That's all I got to say. Like it's one of those things where it's like, I've seen it happen, and it's just not a good look for the company.
Absolutely.
So that's always good. And then professionalism, like I always like it, if you have an office, like my company is really great. They're really, really grateful to them because they provide me an office so I can meet my clients anytime I want in a private office.
Good.
A lot of brokers don't have that. But what I'm trying to say is if you don't have that from your company, arrange for it somehow.
Okay.
There's like, offices you can rent, you can pay for monthly. So that kind of to me looks like professionalism. If you can meet your client as opposed to a Tim Hortons, you have a private, it's an intimate conversation. It's their finances. So just sit down in person with them, go through it in person and just, in a private atmosphere.
Right.
That's what I'm saying. So some brokers, sometimes they lose clients that way too, is when they don't have an office. A lot of clients are okay with the Zoom, but a lot of my older clients, sometimes clients are even elderly, they prefer the face-to-face. So you have to have accommodations for both.
Absolutely.
And that's one of the things. Always dress nice, obviously. When you go to meet a client, if you're coming from the gym, try to change if you can. Get a shower in before you, meet them in a nice, look good. And that's about what I can say. Yeah. And just like, and then like we have like with our pipeline system, like through our Velocity we use, remember your clients' birthdays, anniversaries, when they got their mortgage. So then you can send them cards. Like really good brokers, the ones that are successful, they spend hours and hours in a room just making cards for all their, they have anniversaries for all their clients.
That's beautiful.
Yeah. So, it's my client's birthday. It's Chris's birthday. It's just Jerry's anniversary for the mortgage. You give them a little, gift or something as well. Or on the closing day when they buy a house, go meet them in person and give them the key. Yeah. That's a realtor thing to do typically, but sometimes the brokers go as well. But give them a housewarming gift too.
Yeah, so. That builds a relationship, right?
Builds a relationship. So that's what I'd say. Those things like professionalism, an office, and just like time.
Honesty and integrity.
Honesty and integrity. Don't be transparent about what they're like we do like in our profession as well. We do have to have like disclose our commission that we're getting.
Okay.
So if I'm getting closing a deal, like I have we would call it Form 10. They sign the form and they know how much we're getting paid.
Okay.
Even though they're not paying us, the lender's paying us. So things like that, like just like showing those documents and transparent, like this is how much, they probably don't even care, but like at the same time, it just shows transparency. So it's good.
Absolutely.
Yeah.
And especially in financial transactions, if you have a trust
Yeah.
between your mortgage broker and your client,
Correct.
it's easier for the client to trust you.
It's easier for the client to trust. So basically what I would say is, I would say just be like transparent. Like, yeah, exactly. Just be like, hey, this is what, this is what's happening. This is your rate. This is your, give them their options. So like sometimes like brokers always say too, is the rate's not always the only factor, because sometimes you get a bank with a really good rate, but then they don't have very many options, like prepayment options. Like you want to pay extra money to the mortgage to go to the principal, but you get a really good rate, but they don't even allow you to pay more than 10%.
Yeah.
So, one rate, I'm not going to promote a variable, but right now, a variable rate mortgage, or they call it an adjustable rate. Those are really good right now.
Okay.
Because a variable rate is really flexible because you can always change it to a fixed anytime.
Okay.
So what happens is when you're variable, let's say you don't like the fixed rates today. They're high right now. Fixed rates are high. So you take the variable. We have one lender that gives us a 3.7. So you take a 3.7 variable, and then in a year and a half, when hopefully the rates come down for fixed, you lock into a fixed then, no penalty.
Nice.
So a variable is a smart choice right now.
Okay.
And us brokers, we can usually beat the big banks in the variables. So yeah.
Audience, variables.
Yeah, variables. Yeah. Again, it's up to you. I never push it. If you like the peace of mind of fixed, I will never push a variable.
Yeah.
But just keep in mind that in today's rate, fixed rates are a little bit higher than they should be.
They are.
So,
yeah. But that's good that to be a successful mortgage broker, you need to have the knowledge of all the financial products so that you're able to tell your client what are their options and then let them choose whatever they want.
That is correct. It's that's the best way you put it. You give them options, because like sometimes like bad brokers too, like as I'm pointing out all the bad habits, they sometimes don't even tell the client all their options.
Right.
They just tell them like it's like a car salesman. I hate to say, but at the dealership, like they don't even show you like the model, but they want to get this one off the lot quick. They just go quick, come here. Like, no, don't do that. Show them their options. This is your option. This rate might be better, but you don't get this option. So just be upfront. Yeah.
Yeah, just be truthful.
Just be truthful. Yeah.
And that goes a long way, actually. For example, you were there in Victoria. You are here in Victoria all your life, and
All my life.
you have a lot of relationships with a number of people.
Yeah.
And when you are truthful and when you do the right thing,
Yeah.
this goes a long way.
It might be the harder thing to do in the short term, but like I'm blessed, like to have great parents too, because they raised me that way. As a child, like my dad always, my grandparents always do the right thing. It'll pay off, and they're right, because from my experience, it does. Because somebody does something foul or lies or cheats, it becomes out in the media. People find out. Word spreads fast. That guy's black mark now.
Right.
He is. No one's gonna go. Like, you get a bad reputation.
Yeah.
Whereas, so.
And plus, when you get a bad reputation, it is for all the people who are around you. So it's
Correct.
So people start judging. And when you do the right thing, you get respect for everybody who's around you.
It's respect, and that's what. It's and it's like, we'll touch on that later, but like your reputation matters.
Absolutely.
Yeah. How you treat people is how you're gonna get treated back. So so that's something that.
So do you remember a story where you helped the client and then you're really proud of yourself?
Yeah, that's what I was gonna say. Is like, this is where kind of my values align with Fateh Care as well. Yeah, so with Fateh Care, because you guys are an amazing charity, and I have to give you a shout out here. So so like I remember in my banking career, so like I get this question asked a lot about one occurrence. It happened many times. Like,
that's good.
I just made it a habit. Like, my sales were always driven by service. So in 8 years as a banker, I was like, I'm not trying to brag, but I wasn't like in middle of the pack. I was award winning.
Awesome.
So I was the top in the district for mortgages, like 10% in Canada for a few quartiles. Like, I won many awards. So like, it was always from service though. That's what I'm trying to say. So like, you treat the clients well, and then their families come back to you and their friends come back to you. And you have, instead of one client, you have 6, 7 clients. So service was always the way that.
That's good.
That
good.
drove my sales. Yeah. So service, I was never sales focused. I never went in like, oh, this is what we're going to buy. No. It was always service. So,
That's good.
yep.
So the thought process is always, giving back to the society, doing
Yeah.
something good,
Yeah.
and doing something good through your profession.
Yeah, like even like in like the bank too, we'd have elderly clients come in sometimes like in 70, 80. And I was always thinking, I was like, if that was my mom or my grandma, how would I want her to be treated? Right. So like, I don't think she's going to come get $1 million mortgage, but she probably needs help with her credit cards, her chips not working. Just help her,
Oh my God.
just help her. Yeah. So I remember those things that she would come in. So it's like, just don't be an idiot, right? That's like, just don't be an idiot. It's just common sense. Like help her. You'll get sales. People will come. But the one client who she might not even need anything sales, but she wants her credit card. Just help her, right?
That's such
just common sense.
such a sweet thing to say, right?
Yeah. So I was focused on that. Like I was always like service, and then but sometimes like it was funny. Like I didn't go, but even like the elderly clients, like I would help them. And I would get like one of their family members later as a client too. Not that I looked, but they're just like so happy. They're like, "Do you want to help?" This is so they would be like, "They need a mortgage. My niece, my granddaughter needs a mortgage." So I was like, "Oh wow, okay, interesting." So yeah, so like service. I think
That's great.
service focused, and then sales will come. Yeah, just don't be like the greasy salesman. Yeah, don't be like that. Just be upfront, be honest, and just
Be a good human being.
be a good
right?
human. Yeah,
Yeah, and you're going to be successful anyways.
exactly. Yeah.
And Gary, was there any time in your life where it was a very struggling or very challenging moments where you were struggling with your profession or with your life, or and was there any time
Yeah. Like for my life, like struggling, like I can't
or
remember.
challenging time?
Oh yeah. Oh well, okay, yeah. So university was challenging.
University was
Oh yeah. So high school, I was an honor roll student. And then
Nice.
yeah, really smart, really good.
Okay.
But then when university came, I'm like, holy God, it was a different level of education, right? So I did well. I got good grades. I graduated, and I did well, but it wasn't easy at first.
Okay.
My grades weren't the best at first. Like
First year is always challenging.
it's challenging, yeah. So that's what I'm saying. So it took time. So yeah, so it took time. But then eventually, I learned. I'm like, okay, you know what? Like this is not the right subject for me. I'll switch majors. I'll do something different. But it was a challenge for sure. It was not easy. There's a wake up call. So, yeah. So I think that was definitely got better as time progressed. But that was a challenge. Yeah, banking was too. As a teller at RBC is a tough job.
Yeah.
You're brand new to banking. You're trying to learn the stuff, and a lot of things. Yeah, like I can remember that too. Yeah, it's always challenging because like you don't know the banking stuff. Like like you're supposed to find like sales opportunities, but help the client with their transaction and all that stuff, and just take care of their first, like they came to deposit a check, do that, but then you got to find a sales opportunity, right? So you don't do that at first, and then. So those are challenging. Yeah.
So when you were in those stages,
Yeah.
and how did you make yourself comfortable, or how did you came out of those challenging situations, and how did you ground yourself? Was it your family which helped you?
Yeah, probably the family values, the ones that we talked about, the ones like yeah. It was probably just that nothing's easy at first. It takes time, and you have to build your. So like I think family values helped. The strength at home. The power of prayer. I do pray.
That's great.
I do twice a day, every day. Haven't missed a day for 14 years.
Oh wow.
So I grew up as a Sikh, like a Sikh, Punjabi Sikh. But I still hold those values, and I remember what our 10 gurus and our martyrs and shaheeds went through. So what I'm going through is nothing compared to that.
That's
so what am I crying about? So yeah,
good.
I just hold myself to that standard. So
that's great. So it's important to remember your roots,
exactly
where you
came from, and that's the strength that drives you. Yeah,
that's great.
Yeah, so we're very lucky. So, but for everybody, it's something different. So whether it's something, whatever it is, maybe a quote, I don't know, but probably it's definitely tough, but it is, it was challenging. Lots of time. High school was challenging for all of us. That's like an emotional time. You don't know who your friends are, what you're doing, but eventually you find your way. But yeah, I think like banking was tough too, because banking has a lot of sales targets.
Yeah. So
your salary, your commission is driven on targets. So then you have to find the fine line. Like, do I sell this to my client, or do I do what's best for them? Or do I just find the fine line, right? So that was tough. Yeah.
So people who are starting new, I mean, people who are just getting into banking or
Yeah.
getting into mortgage
Yeah.
stuff,
Yeah.
and they feel it's frustrated and it's
Yeah.
difficult.
Yeah.
And what advice would you give
For which field?
for mortgage or for banking?
Becoming like a banker or mortgage broker as a career.
Yeah.
Oh, wow. Okay.
So what you are right now?
Okay. So I would definitely say like, for example, there's certain products that I'm not going to mention, but as a banker, not just me, a lot of my fellow colleagues, we wouldn't sell those products.
Okay.
I'm going to label them as they were insurance products. I won't go into details, but they weren't in the best for the client.
Okay.
So we're not going to sell it. So I never sold it, and I still made my targets. So what I'm trying to say is, I believe in karma.
Okay.
So do what's best. What you said. Do what's truthful. Don't sell something just to make a quick buck, because like you just said, that it will come back. And it's do what's truthful and honest. So that's what I would say. Hold your, if you don't make your target one quarter, don't ruin your good habits and become unethical and start selling stuff to clients just to get your targets. Because you, like I said earlier today, your reputation will be blemished.
So don't panic.
Don't do it. Don't panic. I panic all the time. We all panic, but like, don't make a dumb mistake you're going to regret.
Good.
Like selling something to a client they don't need, like a 70-year-old insurance, that they already have it. Like those things got to be careful. So I would say anybody new, it's good to have a passion to get your career. But
stay close to your values.
Yeah. And one thing I want to say, honestly, what I feel is in today's banking in 2026, like the level of customer service at the branches is really bad in my opinion. Back when I was there, like our managers held us accountable.
Okay.
They held us to a high standard. So we had to basically serve our clients to the best.
Yeah.
I don't think they enforce those anymore. I think the level of service in the banks has gone down.
Yeah. I think post-COVID also, there have been a number of changes. Yeah.
It's changes but like that's like an older person, 70 years old, they want to come into the branch. So I don't know, but yeah. So you have to be like, meet them. So,
So, and Gary, last question. So, right now you're here, but let's say, 10 years from now or 20 years from now, how do you want to be remembered? How do, people want to say, okay, yeah, I know Gary. This is how he is.
Just remember me as, the one thing I'll be honest about, one thing that the way I've been raised is I don't just follow the crowd.
Okay.
Like that's like a blind sheep. So like the way I'm raised is like, just because everybody else is doing it doesn't mean it's the right thing. To a certain standard, yeah, you have to follow because but don't just follow the crowd. So what I'm trying to say is like, I want to be remembered as somebody who acted on his own intuition and not on somebody else's. Because people could be telling you to do one thing, you think it's right, but it's not. Do what's in your heart, that's my main thing. I want to be remembered as somebody who followed his own intuition and didn't follow the crowd, and just to be did what they did. To a degree, it's okay again, but like nothing like for example, I won't get just too much, but this FIFA thing, soccer is amazing. I'm not a soccer fan. I never have been. I'm not going to become one in 2026 for FIFA. Okay. I didn't watch a game because I don't fake it, right? Like I like American football, Dallas Cowboys, UFC, boxing. And I don't mind people who watch soccer, but I won't be that bandwagoner who's a fan every 4 years.
Okay.
Every 4 years, FIFA, and I'm going to be a big, no. So it's just, I try to stay true. That's what I'm trying to say. So if I'm not going to be a bandwagoner. That's honestly what I want to be remembered as. That's it.
That's awesome.
That's it.
And I think what we have got from this podcast is if you have to be really successful like Gary, there are very few basic things that you have to follow. You have to be a good human being. You have to be truthful. You have to do what's best for your clients. You have to be transparent and you have to follow your heart. And again, do not panic. And you can panic.
I do panic. Yeah, I panic a lot.
But don't do the wrong things when you panic.
Don't make a dumb mistake. Yeah.
So we always say money is a byproduct of the service that you do.
Yeah.
So make sure that you put people first, and everything else would follow. So Gary, it was such a wonderful time, we spent with you, and we got to know you, and you gave such important advice.
Thank you.
Such important financial advice to all the people who are new to the sector and old to the sector. So
and one thing I just want to say quickly is that, and my friends and my clients know that too. Anybody who has any questions for me, even if you're not buying a house this year, next year, you want to plan, you're new from India, new from any other country, you just want to plan for years down the road, you have my number. You can call me. I'll give you free advice. I don't charge. And people who know me know that. Okay. So my friends in my circle, they all know that I do that all the time. I don't it doesn't bother me. It doesn't like, so anytime. Yeah.
Perfect. Thank you. Thank you, Gary. Thank you so much.
Okay.
It was amazing talking to you. And we hope best wishes for your future, all your future endeavors. And we hope that you grow on to be the most successful
Thank you. Yeah.
mortgage broker in Victoria.
It's a team effort. So
yeah. Perfect.
everybody. Yeah.
Perfect.
Yeah.
Thank you. Thank you so much.